All right, man, what is up? Hope y'all are doing well on this beautiful Saturday. And voice crack. But yeah, man, summer's been a great month. Weather's great, and we are, doing the same shit that we usually do. But I just want to thank y'all for the support. So far, we're almost at 1K subs on YouTube, which is just insane. I've been really putting out content for you guys. I still am trying to figure out the niche and how to make. Oh my god, the voice cracks, bro. How to make good content and engaging content for y'all to see and what you guys want to see. Unfortunately the trading space is only has the attention span of a squirrel. Only certain stuff gets views. But yeah, in this video, I want to take a trip down memory lane and I want to cover the model and framework that made me $100,000 in 1 month trading gold futures. So you guys know this. I've talked about this multiple times. But in May of 2023, had one of my biggest months ever. It was about $100,000, actually a little bit more than that. And yeah, I just thought I would cover the exact day and show you guys, the trade that I took, the understanding the rationale on it, and how I made that money. And it's not going to be a crazy long video, so I don't like to waste time, guys. You guys know me. All these videos are 30 minutes long. They have all this fluff, right? People are just yapping for 30 minutes long, and it brings you no value, right? Because there's no point in watching a 40-minute video. Like, for example, ICT, bro. What's the issue with ICT? ICT just yaps, bro, for hours and hours. And everything that he says can be put into like a 10-minute video, and I'm not going to make you guys, wait freaking 40 minutes and when I could explain it in a much more concise way in 10 minutes and just super simple right off the bat, right? So that's one big thing, guys, when in life, right, being concise and being able to convey information in the simplest way possible that makes the most sense, that doesn't have to be, super long, is the way to do it. Okay, so this is basically how I really did it, and I made a video on this in the past. But essentially, what happened was this was in May, right, and what I was basically looking for, and we'll kind of go a little bit more back, like right around here, all right, was essentially, you guys know I use the RSI as a level of overbought and oversoldness, and it's a really, really good confluence. But the way is when we're taking a trade, right? At this point, I was using my day trading system that was working amazingly at the time for CFD prop firms, but the real edge comes from discretion, as you guys know, right? But the whole trade this was on gold, right? And essentially, you guys know I mark out my extreme areas of supply and demand. So we're gonna mark out these areas of demand, right? Remember, what is an area of demand, right? Area of demand is when we're making an uptrend, right? And this is just called swing structure. These areas, right? These swing pivot points are gonna be called your areas of demand, and vice versa. These areas are going to be areas of supply, right? And why is this the case? Because these areas, okay, are where the origin of the swing move comes from. These are the strongest in the legs because, well, it's where the orders are literally coming from. And when these levels are fresh, when they've been made in real time, they usually get retested for the second time because they're fresh, right? And that's just kind of how it works. So I'm going to remove all that. I hate how it does that. You got to remove the drawing. But basically, I go to the 4 hour. I only mark out these levels usually on the 4 hour and 1 hour. But it's really, again, this is one more thing. When you're looking at the time frame, guys, okay, when you're doing the top-down analysis, etc., don't look at the market as a static entity. You have to remember, the market is fractal. The same thing's going on. You're just looking at a more zoomed-in picture or a bigger picture. And remember, the bigger picture always tells the story because that's what's going on. You just can't look at 1 minute and 30-second structure and think that, oh, like this is how to do it. This is the best way, and just you're gonna get cooked, bro. All right. So I only look at the 4 hour, and basically I'm marking out these areas of demand, right? So, and this is surprisingly very simple. Like you would think that, oh, I'm doing something crazy. Like, no, this was genuinely very simple. And actually, let's keep going. Actually, I think this is on, yeah, okay. So it was this day right here. It was May 18th, right? So remember, we have multiple swing legs, so all these points are going to be very reactive. So that's what you can say. So we're going to mark out all these areas, right? And yeah, we have all these areas marked out. Okay. Now, what's one more thing that I use is the RSI. So the RSI is a very powerful tool because it tells you where the market will potentially reverse off of and where its overboughtness and oversoldness relative to something. Now, you cannot make this mistake, guys. This is the biggest mistake that I find. Okay. People will say, oh, the RSI is overbought here, I'm going to sell. No, you cannot do that. That's not how the RSI works. It's a contextual-based tool, not a timing-based tool. No indicator is a timing-based tool. I hope you guys understand that, okay? You time the market based on real price data as well as other confluences, all right? So when price starts dumping to this area, this demand area, and the RSI is super overbought, okay, excuse me, super oversold, I'm thinking, okay, right, RSI is super oversold on this is the 4 hour time frame where we're coming into this demand area, right, on the higher time frame. And I'm really thinking of now looking for longs because we're not just gonna put a limit order. Like sure you could, but you're gonna get cooked a lot of the times. Like yeah, okay, it worked out here. If you just put a limit order at the level, right, at the midpoint or the open, and you just do this, oh RSI is oversold, I'm gonna just buy like this. You just got stopped out, right? So you need a little bit more and actually a lot more context and narrative on this. Okay. So when that happens, when these levels are hit, we have two confluences, right? Two high probability confluences: our extreme level of demand, okay, and our RSI being extremely oversold on the higher time frame. Excuse me. Now all I do is I literally go to the lower time frame and I look for some type of confirmation. So in this case, remember I use 1 minute change of characters and breaks of structure. So we'll do a quick little review on that. So when you have swing structure like this, right? We have to have a way to characterize swing structure and market structure in a certain way. And basically, this right here, okay, is going to be like what a market looks like, a theoretical, optimal market, right? Obviously, real market structure is going to be different. But when you start to basically, let's say we're at this leg right here. This right here is called a break of structure. So you can see right here, let's actually make this a little bit more like this. So make some variance, right? These, let's just make this a little bit lower like that. These are called breaks of structure. Okay, breaks of structure. So there's two types. There's internal as well as external, but we're just going to say break of structure in the case of these, these examples. All right, and when a market shifts, from bullish structure to bearish structure and vice versa, this is called a change of character. Okay, a change of character. Now, when we start going and continuing to break structure to the downside in the same direction after a change of character happens, that is now called a break of structure, okay? You have to have a way to identify and characterize the first break of structure that's changing from bullish to bearish narrative, okay? A lot of people like to use the term market structure shift. I don't. That's a terrible freaking term. But this is how it works. And honestly, I might just use this as a thumbnail because, why not, right? Okay, so now that we have that situated, right? I was literally looking for the same exact thing on the lower time frame because again, the market is fractal, right? So I went down to the 1 minute time frame. Oh, and I guess we can't go because it's too far back in time. Let's actually see if let's try one more time. 1 hour, 1 minute, and are we gonna get it? No, we can't. Okay, we gotta go to the 3 minutes. So with tick data, you can only, unfortunately on trading, you only go a certain amount. But essentially, it was literally that, right? Markets move the same exact way on every single time frame. And we basically, on the 1 minute, obviously this is the 3 minute, you can't see it, but we had the same thing occur. If I were to kind of mark out these wicks, you're going to notice, right? Let's start marking out this structure like this, okay, on the lower time frame. So just so you guys get an idea of what is going on, right? Just so you guys get an idea of what's going on. All right, this is beautiful. Let's do this. Okay, so this is what's starting to happen now, okay? Notice, a real market microstructure will look different from the theoretical, but the principles are the same exact thing. You just have to get good at identifying it, okay? So we basically have a change of character right here on this structure, okay? Then we have a break of structure, okay? Right? Now, again, a break of structure and change of character, they're defined as strong closures above previous swing highs. There's a way to do it. You just got to get good at it. There's also some intuition behind it. I can't really teach it to you. You just got to get experience. Join the mentorship. I teach it in there, right? But yeah, so right here, you can see we have a change of character. Oh, what the heck? Not there. We have what the frick is going on? All right, we have a change of character right here. And then you can see we have a break of structure, right? Now, we're not going to get super complicated into market structure. I'm just trying to give you an idea of it. But the whole idea was saying, okay, I'm going to literally scale in at every single break of structure because this is just how a market works, right? And yeah, I did it. I basically got in right around here. I had my stop loss very tight because we shouldn't go past this swing low that's showing confirmation. You could also say this was a nice doji confirmation, a 3 minute engulfing. That's something we also do use if we're just entering straight off candle confirmation. That's one more setup. So like, for example, we wait for the level to get hit. We wait for some doji confirmation, then we take the trade, right? So this would have stopped out, and then if you entered just straight off the doji confirmation, it was that. So, using a couple other things, right? Mentally, I'm making note of, but basically this was the trade, right? And then what happened was I after we then broke structure to the upside right here. I then entered again market order because I was like, okay, this is looking pretty good, and we should not trade. But this is most likely going to be the floor, and we should not go past this swing low right here. And you can see this was a it almost stopped me out, bro. And I don't even, remember, there's no news. I guess you could say I got blessed, whatever, right? But basically, I was in these two trades. And it was very simple. I was just targeting an internal high technically, right? That just made the most sense to me. And it was this high right here. So this went for 6 RR, and then this went for like another 4 RR. And I was basically risking about 1% on these trades. So on a 500K funded account, this was, or like all through all my accounts, this was I don't know, like $1 million in funding, right? Or $1.4 million in funding at the time. Basically, I hit these two trades, and yeah, I basically made around 80 to 90K, 100K. It's you can, if you want to see the full in-depth video, you can go into the past of my YouTube history and take a look. But it's really simple, guys. Where am I trying to go with this? Okay, just to give you like a framework, because I don't wanna waste your time on this. Okay, number one is you need to, and we're gonna write this out. Let's write this out. Fuck it. Let's write this out. Okay, this is literally every single guru strategy I'm giving to you for free. Okay. And I've given so much sauce for free on my page, bro. But y'all be sleeping on the sauce. So remember, guys, comment, subscribe. It really helps me out to grow because I'm trying to bring you guys quality education. My whole goal is to be the number one place to bring y'all the best information in the industry. You know what I'm saying? But yeah, let's talk about it, right? So number one, right? Number one, okay. You need to have confluences when a level is hit. You just can't take random trades, just buy and selling at random points, because then you're just gambling, right? So number one, make sure a key level is hit. Number one, make sure a key level is hit. Number two, look for 2 to 3 confluences at that key level. Okay, I can't see what these are going to be. I gave you, a couple of break structures, changing characters, etc. And then 3 is execute the trade using confirmation. Okay, confirmation tools are going to be market orders, doji confirmations. They're going to be order flow confirmations. There might be other ways you define confluences, right? And then number 4, if when your advances you scale into winners. Okay, when you have a good higher time frame level and a narrative, okay, you scale into trades. Tom Hoggard, my favorite trader, says this. Okay, you need to add to winners if you want to make bread. That is how everybody does it. That's how mom did it. That's how dad. No Iron Man reference. Okay, but you guys get my point. So scaling in has made me so much money, bro. So much money on trades because once you, and yeah, you could lose, right? But that's exactly why we have risk management. It's so simple, right? But this is literally the framework, guys. This is literally the framework. So I don't want you guys to overcomplicate this, but it's literally like this. And yeah, I don't know what else to say, man. That's the video. You guys just learned some sauce on the video. All right. But yeah, in this case, I hope this breakdown made sense. We're basically entering a higher time frame demand. We have a lower time frame change of character, and then I just scaled in market order right there, and then boom, I just targeted a simple high just for TP. And yeah, it was a great trade. Now remember, this is not risky, but Powell was talking, and at the time, like I was kind of not new to trading, but like you don't really see moves like this, right? You don't really see crazy expansionary moves like this when Powell talks. In just my experience at the time, and then I was like, what the fuck? When I just see this shit rallying up, I was like, holy shit, like this is insane, And then I hit TP, and that was it. All right, but I love y'all, man. Appreciate the support. If you guys can show some more support, I would also appreciate it. Show some love, like the video, comment, subscribe, and if you have any questions, my DMs are always open. I'm always gonna respond to everybody's comments, and yeah, with that, I hope that made sense. I love y'all, and take care.